In today's video, I'm going to revisit my work on Disney, and I'm going to show you something that didn't work, okay? Because obviously this stuff doesn't always work. But what I was looking for was a pullback to the last low that was made at time and price, and it would have been perfect if we had made the, let's say, actually the 786 retracement of one swing. That would have overlapped 100% of this prior high to low swing. Okay, that overlapped that beautifully. And then there was another extension of this low to high swing. There was the 1618. But we didn't quite hold that area. So I can't call that a hit because it blew through the zone and then came back up through it. Okay, so that's not a setup that's worked as far as I'm concerned. But I do want to go over the original parameters and tell you that you can still look for new buy triggers against the original setup. And the original setup was, you know, where we had time and price come together, where we had a prior decline that lasted 26 trading days, and then the decline into this low was also 26 trading days. And we also had some key support that overlapped anywhere between, you know, the 97 to $100 area. So the original setup is still intact because you can see this is where we took off from. Obviously, you know, it got crushed after we made this high. But now you can look at it for another buy entry, okay? And you can define your max risk underneath this last low. You can also have less risk if you do set this up on a lower time frame chart. Then what you do in that case is, let's say if you buy a pullback, then just have the risk definition underneath the low made prior to your new buy signal. So that's something that I'm going to be watching in Disney. If we do resume the rally in Disney, then of course we have potential to head back towards the original target, and then we'll also have a new target off of this swing.